GrimsbyDailyHomes.com.
Hello, Isaac Olchewecki here with another special edition of GrimsbyDailyHomes.com. I brought in a good friend of mine here, James Loewen of Loewen Group Mortgages, a mortgage expert, talking about how to get approved for your financing based on different types of employment. So without further ado, good friend James Loewen.
Thanks, Isaac. As Isaac was describing, there is different types of people and different types of employment that we all share. And one of the biggest questions we get when we come in is the doubt they've been to their bank or such that they don't quite have, maybe you don't have quite standard employment. So there's generally three types of income, and the best thing that I can do is help educate you. So without further ado, let's take a look. And I've dubbed this Financial Education 101. Class is now in session, and there's three types of income earners. So let's take a look at what those exactly are and what you might fit into and how we can still approve you for financing. So of those three income types, there is a salaried employee, your standard teacher, police officer, firefighter, your business owner, the guy that owns his business down the street, and the last person is a commission-based earner. This might be someone that's in real estate or in insurance or financial planning, maybe even car sales as well. And there's been big changes that's happened in the last 2 years that I'd like to review with you. Now, the first person is a salary guidelines, pretty standard, 5% down. We can even do this with 0 down. It's exactly what I've said. 0 down financing is still available. You're just full-time, you're a non-probation employee, a letter of employment, pay stub, that's it. Very straightforward, very easy. If you do happen to be on probation, we can still get around that. A lot of people are concerned that they have to wait 3 months. Not the case. If you've got previous employment, you can give me a pay stub or last year's T4, we can still get you approved. So you don't need to be waiting that long, and don't worry, you can still leave your existing job and buy a house. Now, should you happen to be part-time, you haven't been on a job in the previous year, then we can still use a 2-year NOA, which is your notice of assessments, average, or a T4s, which is probably easier for you to have. Based on that, we'll use a 2-year average, and you're still fine to be able to qualify and use your employment income. The last thing you might find, and I've got a few friends and family who have done this in the past, is they just recently lost their job. We're sorry to hear that. However, we can still, through exception, use your last year, 2 years notice of assessment. The idea is that you've been working in the past and you will find employment into the future. So no matter if you're part-time, full-time, permanent, probation, lost your job, you still have options available out there. Not too many people know that, with 5% or even as little as 0% down. The next person is a business owner. The first thing you can do, 5% down, is using your qualifying income. Similar to the last person, they're using their 2 years notice of assessments or the taxes. On top of that, because business owners love to do those write-offs, as we all hear, we can gross up their income by 15%. That means we can increase their qualifying income, allowing you to buy a much larger place than you probably would have expected originally. Now, if you're using what's called a stated income, and this is the one that gets a little confusing, you're allowed to state your income. It might sound a little ridiculous, but we can write down what your income might be. Say, for example, you're doing contracting, you're doing some money under the table, some cash. It doesn't go through the books, well, good on you. You've saved some taxes, and now this is an eligibility for you to qualify for a mortgage. That's only 10% down. We must be able to show your business for 2 years and be able to show that you have no personal taxes owing. Now wait, if you say, I haven't done my taxes, I've been working far too hard in my business, we've got a third option, and it's called a stated income with no notice of assessment. Now it does require further down, usually 20 to 25% down. There might be a slight rate premium. Now on the other two, there is no, you're getting the best rates that the mortgage market has to offer. All right, so if your credit happens to be weak, less than 2 business years, and for 2 years in business, this is a great solution for you. The last person is a commission-based earner. You cannot state income, and this is the change that's happened in the last 2 years. Real estate agents, mortgage brokers, investment offices, insurance, they used to be able to state their income. It is not the case anymore. So they are just like a salaried person. They must use their 2-year notice of assessment average. I can show you online, as we did last time, where the Canada Revenue Agency option is to be able to sign up and find your notice of assessments online. We can, however, go gross up by 15%, which is not the case for a salaried employee. So you still do get some beneficial treatment being a business for self person. The minimum down is still 5% as well. Other accepted incomes, and people ask me this all the time, I've got child support coming in, can I use that? Absolutely you can. You can also use alimony, things like child tax credit that you come in, the bonuses, if you're receiving an annuity income. All of these things are applicable incomes that we can add on to your regular income to qualify. Now, how do you apply? You can reach us online at lowengroup.ca. You can also give us a call by phone. We can start your application that way. We can meet in my office or at your home. And of course, do follow us on Twitter, Facebook, or our blog, continuing on the financial education. Thank you very much. This has been James Loewen for Loewen Group Mortgages.
GrimsbyDailyHomes.com.